Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, June 8th, 4:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. Hopefully, by the end of the week, we'll actually have all five of the major indexes above their respective moving averages and taking a void KRE off of the market stage. You can see over here on the trend gauge, leadership since 518 has been bullish. Short term, now we use the major indexes, the five major indexes, and where the price is relative to three moving averages across three time frames and this determines how much capital we put into the market. So short term uses the 21-day exponential moving average. That's been an uptrend since 518. Medium term, yesterday we went to uptrend as the mid and small cap and Dow, which had been lagging, joined that party. And as long as mid and small don't blow up tomorrow, they'll be above their 200-day moving average also, and will be all four green, meaning the leaders and the three time frames that we track. So what happened today? Big tech back on top. I might get a t-shirt printed that says, I survived the great AI tech sell-off of June 7th, 2023. Most of the gains regained yesterday, and didn't mean that we rotated out of some of those sectors that got money flows. And mid and small caps took a very well-deserved break after a two-day move up. So I didn't see anything really that is causing me angst. So bottom line, big tech back on top. The S&P challenging that 4,300 level again. We'll see who wins that battle tomorrow. Be a good sign for the bulls to close above 4,300. That's been resistance for, well, you'll see when we go through the charts. Small and mid cap leaders did not outperform today. The RG8 up 0.22%, S&P 500 up 0.6, led by the tech sectors. NASDAQ 100 up 1.2%, Dow up 0.5%, mid caps down 0.4%, Russell 2000 small caps down 0.4%, Global Diversified 60/40 stock and bond up 0.6%, both foreign stocks and foreign bonds higher on the day. In-house GROTECTION up 1.06%, pretty much regaining 90+% of what we lost yesterday. So let's get into the charts. We'll start with not ITB home construction, but that's forming a good pattern, but the S&P 500. And you can see really, so 2 days up off the 21-day moving average, and now the fourth day of consolidation, bouncing its head against this 4,300 level. Let's go to the 30-minute chart here, and you can see very clearly this 42.99, today's high 42.98. So right there, that's where we need to get through our, we shook out below 42.63. So technically on the 30-minute chart, this is a double bottom. The midpoint 42.99, we get above there, and it's the next leg up for the bulls as long as we then clear 43.25, which is resistance over here from last August. So that's the next level up. 43.25 is what we want the S&P 500 to clear. NASDAQ 100 broke the 80 MA, close below it, bounced at the 10 SMA today, and up higher today. So that turns yesterday into an inflection point, and tomorrow's low is very important, both on the S&P and especially on the NASDAQ 100. So anytime you come into a resistance level and you pierce it, test it, and then bounce off of it, that makes that, it puts a low in place, and in this case, at least a short-term low. And if you break that short-term low, that's a change in character, because you can see here, every time we've tested, we've had just making a series of higher highs and higher lows. And if we make a lower low, then that's a change in character and maybe time to at least take a little bit of the foot off the gas, so to speak. So yesterday's lows, when you bounce off of them, become that much more important. Let's go to the Dow Jones Industrial Average, up 0.5% today, higher close relative to the highs of last week. So good stuff for the Dow. Maybe done with its relative weakness that we saw for 5 to 6 weeks. Mid caps, big day up on Friday, rest day on Monday, big day up Tuesday and Wednesday, rest day on Thursday. This is a textbook bullish action, what you want to see. Inside day, no extreme selling on the index anyway, and closing toward the top of the range, also a positive. We started out with a gap down of minus 0.4%. That's where we closed, but we tested lower and bounced. Same situation for small caps. And this is how you form the right side of a cup base. You can see the cup starting to be drawn here. So we just want to keep making higher highs and higher lows, put in a handle, break out above the 200 area. And we certainly don't want to go back below this 180 level. That's a massive support level. Now that so here's the inflection point. So we got above it on Monday. We tested that level, or sorry, that was Friday. We tested the low on Monday. We made a higher high. So that makes these lows that were put in critical. And they're right around that 180 level where we've got the 200-day moving average. And moving up off of there, any pullback should be contained by that 180 level. Let's go to the VIX. VIX keeps making lower lows, and the bears simply cannot believe it. One of the reasons why the market was strong today was the weaker dollar. So right now, this break above the 200-day moving average is a failed break above the 200-day moving average. You can see that was also resistance up around that 28.67 to 29 area. So breaking back below the 200, below the 8, coming into the 21. A weaker dollar is good for stocks, and it's certainly good for precious metals, as GLD was up 1.32%, GDX. Gold stocks up 1.6%, an inside day after a nasty outside reversal day yesterday, but trying to get it back. We need to get back above the 21 like we did for silver here, making a higher high. Bitcoin, Coinbase being sued, second tight day for Bitcoin. Let's flip to bonds now. Bond prices up across the board, meaning yields down, not making a higher high on the week yet. Maybe tomorrow we will. For now, below the declining 21-day moving average. That's on the TLT. That's the long-term bond, BND, the broad bond index, stuck below the 21 and the 200-day moving average. Let's go to 0TYX. That's the 30-year bond. Negative reversal on the yield. So that helps stocks also. NTNX, the 10-year, down 1.85% outside negative reversal as well. RSP, let's check the equal weights. We know with the weakness yesterday in the big cap tech that RSP outperformed big time yesterday, not so much today. Basically flat as those big 6 of the 7 anyway. Google ended up slightly down, but 6 of the 7 with nice gains led by Tesla up 4.6% and expanding those up another 2% after hours as Elon's doing a Spaces with Mary Barra, and it looks like Chevy will probably start using Tesla chargers too. I think they're paying them for that. QQEW up nicely, not up as much as the NASDAQ as the cap weighted index, which was up 1.2%, but holding this breakout from the flat base and the ADMA. So certainly good stuff there. All right, let's flip to the tail of the tape. You can pause it to hit everything. I'll hit the highlights. So jobless claims before the market were above expectations. That signals weakness in the economy, but it actually made the futures gained, especially tech futures, for whatever reason. I don't know. The dollar sold off, probably that's why, and interest rates started to come off. But something to pay attention to, a big jump in AAII bullish sentiment. In fact, it's the highest of the year. If you look up here, up 15 percentage points. So from 39 to 44 and a half. As I said, the long-term average is around 38, 39. This is something to pay attention to. If the sentiment gets too bullish, this is a very reliable contrarian indicator. And it's something that we pay attention to. If you get sentiment out of control and it's being backed up by the fear and greed index, which is at a 76, showing extreme greed. So if we get a reversal and we start breaking, these are secondary indicators, but if we get a reversal when sentiment is high and we start breaking moving averages, will quickly be raising cash, because we know these things run in cycles. You need to let it reset. You need to let sentiment get rid of being too bullish and some bears start showing up. Note the bears were down 13 to 24. That's pretty much on the low side. So definitely something to pay attention to. In fact, I'm going to highlight this so that it's a secondary indicator, but it is negative. Uh, Day count, 4-day consolidation after 2 days up, 9th day above on the 8 EMA, 10th day above on the 21 EMA. Let's see, positive expectations and on the levels. Again, really nothing to complain about today if you're a bull. You can see the sectors that were higher on the downside: oils, regional banks, just taking a rest though, not a harsh sell-off. Oils just can't get anything going though. And this was partially, they reversed on some more Iran supply coming online, the possibility of that happening, real estate down and solar down. So here's our focus list for the day. What do we do in-house? We added to chat. This is our preferred AI ETF. I really like the way the top 10 is weighted, and we took the hedges off. With yesterday being an inflection point, the hedges go back on if you break the inflection point. Semiconductors were strong, and the Nasdaq was strong. We take the hedges off. No reason to keep them on. If you held the low of the inflection point, if you break the low, then they go back on, raising our beta to 1.77. This is the highest it's been on the year. Bottom line for the day: big tech regains most of Wednesday's losses. SPX, S&P 500, challenging that 4,300 level again. Let's get to some charts. We're going to start off with Tesla, because we had four of our big holdings up 2.7% or better today, led by Tesla, which is now up 3% after hours. Go get them, Elon. Trading at almost 242 after hours. And look at the volume on this. This is rare. It happened again back here. And when it happened, Tesla was in the midst of a big run. They don't go on forever. But when you're a big cap like this and you have 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days of above average volume, uh, the big boys are buying Tesla. They had a change in character after their shareholder day, and it's been nothing but good stuff for Tesla. Look at the relative strength, busted above the 200-day moving average. That was what we were looking for, in just 9 straight days up of above average volume. It's not just the 9 days up, it's the volume that really gets my attention here. And this is picture perfect. And I'll stop drooling over it. Let's go to the other three that had a good day for us today. Uber, rough day yesterday, regained the losses today back above that 40 level. And we've got 8% in, a little over 8% exposure to these two chip stocks. NVIDIA undercut the ADMA, regained it. Now that makes yesterday an inflection point again. We do not want to break below yesterday's low on NVIDIA, or our last two buys will probably get sold until it recycles or shows a strength or pulls back to the 21 and gives us a reason to buy them back off, and buy them back up. AMD undercut the 8, regained the 21. You can see a massive, at this 116.50-ish level, massive level of support that needs to hold. That's the bottom of the range. The bottom of the range is buyable with the assumption that it won't be broken if it's tested. So those are the big four. A couple of other ones that we want to look at. My three on the focus list from this morning. Every morning we tweet out 15 focus names that we discuss on our pre-market call. One of mine was ELF, bounced off the ADMA, had a good day. I didn't buy any of these. We concentrated on taking the hedges back off today to increase our exposure. MNDY regained the ADMA and the pivot, looking good there. And Palo Alto was a third one. These are three good looking, what I consider buyable, all from the 21 over 21 list. 80% of our buys come from the 21 over 21 list. Those are the leaders. And Palo Alto bounced off the ADMA right near the pivot, also looking good. ANET made a nice bounce off of its 21-day and 50-day moving average. Remember, this had a big move up on the AI hysteria, and then has pulled back on lower volume right to the 50 and the 21. Good low risk entry there. And DocuSign, a blast from the past, a stock that completely broke down. If you look at the weekly chart, you can see this, a high at 340. You can see how low this stock got, but it's up after hours 10%, was up more than that, but up 10% on their earnings. So right now trading around 64, so that'll bring it into this area. Apparently a good reaction to earnings for DocuSign. And that is it. That is, let's see if there's anything else I want to cover here. Nope, I think we're good. So that'll wrap it for the day. Remember, it's not how much you make in the market, it's how much you can keep. If you like our approach and you're interested in becoming a client, email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. And as I said, not how much you make, how much you keep. We're focusing on making now as the market is healthy. Last year during the bear market, we were focusing on keeping or protection. Right now, we're in growth mode. And with that, I will wrap up the Thursday, June 8th edition of the Market Insight video. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.